Everything has changed. Ripple just announced that they will buy back $1 billion worth of XRP. If you know how rare that is, you already know. This could be the start of one of the biggest changes in crypto wealth. We're not talking about rumors, guesses, or an old news story. That's it, folks. Ripple Labs is buying back XRP from the open market. This is the company that built the backbone of the new financial internet. That's not just trust. That's a billion-dollar level of belief. This is not advice about money. The XRP Millionaire Blueprint can help you stay ahead of the next big financial wave so you don't have to chase it after it's already popular. There is a document, an infographic, a video, and more in this full high-level guide. All of these were made to show you how the top 1% of crypto investors are getting ready for chances that will make them rich for generations to come. You'll find inside the tried and true way of thinking, structure, and plan for making this global financial shift into long-term freedom. You can do it with confidence, understanding, and a plan you can use. The XRP Millionaire Blueprint is mentioned in the comment below this video that has been pinned. Okay, let's break this down. When central banks are getting ready for a liquidity restart, that's the only time we've ever seen something like what Ripple is doing now. Think about what happens when a government buys back its own gold or cash. They're getting more power. They're keeping the flow steady. They're letting you know that what they have will soon be worth more. In the digital world, Ripple is doing the same thing. This is happening at a good time, too. Right now, there is a world rotation going on, but most news outlets aren't talking about it. The U.S. has been quietly shifting its money from gold and other real assets to digital assets like Bitcoin. Trading above $2,600 an ounce, gold has already reached its all-time high for the year. On the other hand, Bitcoin has been stable near the $70,000 mark. But there is a huge strategy move going on behind those prices. Because governments and organizations don't say they want to move capital, they plan for it to happen. One market is pumped up to sell high, and another is slowed down to buy cheap. That's how the game works. At the moment, gold is being quietly sold off, while over-the-counter routes are used by sovereign funds and corporate treasuries to buy Bitcoin and other digital assets. This is where things get crazy. If the US is getting ready to support Bitcoin, it makes it possible for XRP to be the neutral currency that connects everything, the rails between the new digital system and the old banking infrastructure. The $1 billion buyback by Ripple isn't just about price. It's also about power and making sure there is enough liquidity before the next part of the system goes live. All of this is going on behind the scenes of monetary policy, but President Trump is still talking about Bitcoin in a way that is very different from how he did years ago. This person said before that Bitcoin was a scam. Today he says, I can live with it because a lot of other people do it. That's not just small talk, that's easing up on rules. This is a sign that the next government could fully include digital assets in US money strategy. Take a look at that. When a former president, who is now a top candidate, openly changes his position from being against something to being for it, a floodgate of institutional money opens. Because rules don't appear out of thin air. They're built around political movement. The rules change when the tone does. When the rules are followed, the trillions that were waiting start to come in. All of this fits nicely with the global liquidity cycle right now. Rates are being cut by central banks all over the world, or they are getting ready to do so. Soon the Federal Reserve is likely to switch from tightening to easing, which will bring more money back into the markets. When cash comes back, where does it go? It goes into high-yielding assets, risky assets, stocks, crypto, and tech. But this cycle is different from the ones that came before, because we now have technology that is good enough for institutions. Some of the biggest banks and treasury systems in the world are among Ripple's over 1,000 clients. They are no longer trying new things. They are carrying out their plans. This is being done in public. It makes a statement when a company like Ripple chooses to spend $1 billion to buy back its own native token. Big companies use the same strategies to boost the value of their shares, but this time it's global digital liquidity. This is even stronger because of this. Along with XRP, Ripple has a community that does more than that. It goes through it. It is essential for XRP to be able to quickly bridge value in all corridors, cross-border transactions, and liquidity operations. What happens when supply gets tighter and demand from banks rises? The price needs to change. This move is shaking the whole crypto world because of this reason. At the same time, the IMF and top bankers around the world are publicly talking about how blockchains can work with each other. At their most recent conference, JP Morgan execs said they had looked into distributed ledger technology more than 10 years ago because it could change the way they do business. They said it was true. That's not just a guess, that's changing your strategy. The banks that helped build the old system are now getting used to the new one. From rejection to integration, they're making progress. Do you know what that means? Giving up in silence. When the biggest names in the game stop fighting a new tool and start using it, you know things have changed for good. Add to that what's being talked about in public. Raoul Pal, one of the world's most well-known and respected macro investors, just said that Bitcoin is entering the banana zone, which is the next phase of fast growth. That's when the structure of the market breaks down, momentum takes over, and institutional capital floods in faster than most people can respond. It happens every time. First Bitcoin moves, and then money flows into the rest of the crypto market, and that's where XRP has always done well. There are also reports going around that a Solana ETF may be about to be approved at the same time. Take a look at how well that fits together. The US government can't agree on a budget, but ETFs are getting approved like crazy. That's not a mess. That's the dance steps. They're making crypto exposure common for most people. What walks right through that door when it's open? The story of XRP ETF. When an ETF or even just an announcement of an institutional-grade product goes along with Ripple's $1 billion buyback, that's when the big fireworks happen, because the math is clear when you add together higher regulated demand and a forced decrease in supply. At the same time, the market is getting more liquid again. Rate cuts, relaxing, and growing the balance sheet. That's more money that needs to be earned back. When cash flows back in, risky goods go up in value. That's the way it works. And parabolic jumps happen when there isn't enough supply, like when Ripple takes XRP off the open market. This change isn't just in the institutions, it's also in the culture. With over 445 million subscribers, Mr. Beast is the most popular YouTuber in the world. He is now starting Mr. Beast Financial, which will include banking, crypto services, and even lending. That means that one of the most important creators living is about to introduce digital assets to almost 500 million people. Mass hiring is what that is, not marketing. And do you know who is building the infrastructure for a lot of these new on-ramps? Swirl. They're building the plumbing in the back end so that creators, brands, and banks can all join easily through blockchain rails. There will soon be only one network that can connect all devices around the world. Ripple has been carefully building this network for more than 10 years. At the same time, big banks like Charles Schwab, which manages more than $12 trillion, are saying out loud that their clients' interest in crypto is through the roof. Pages about investing in crypto are getting 90% more visits than they did last year. It's crazy to think that the same wealthy people who laughed at Bitcoin now offer ETFs and private exposure through companies like KKR and Apollo. That's a warning, not just a chance event. For most people, this means that crypto is no longer an option. It's now part of their normal budget. When the change is over, assets like XRP that are tied to real-world use, liquidity, and transfers will be at the center of everything. Ripple isn't trying to be a hype token. They want to build the foundations of the financial world. They bought a global liquidity management tool called G-Treasury, which makes their business even more integrated. This means that hundreds of businesses handle cash flow and payments directly through Ripple's network and now maybe even XRP itself. We've been getting ready for this moment, but we're not done yet. The next wave of confirmation, acceptance, and liquidity rotation is about to tie everything together. We're not just seeing Ripple play offense. The whole financial world is repositioning itself before a full system restart. If you know what to look for, the signs are all over the place. The backup, the Bitcoin pivot, the approvals of ETFs, the IMF comments, and even the timing of events that affect global liquidity. It all works together like a clock. Let's begin here. The people at Ripple didn't just decide one day to put $1 billion into their own asset. It's smart to move like that. In this case, the company knows that things are about to change in its favor. They've been through the fights with regulators. They made it through the SEC case. They've put together a network for university-grade payments that links more than 70 countries. When the big tide starts to turn, they strike. That's not an accident. It's very accurate. In the background, Ripple has been building the rails for real-time settlement with the help of central banks, payment channels, and fintechs. This is no longer just a guess. Pilot projects, official partnerships, and private liquidity tests have all been written down. A lot of people don't know this, but these tests aren't about using it in stores. The kind of money that moves trillions of dollars every day is what they're talking about. That's where XRP really shines. It's designed to be faster, more efficient, and able to grow in ways that other systems just can't match. Let's zoom out now. In their talks, the IMF, the World Economic Forum, and the Bank for International Settlements have all used the same term a lot. Financial networks that can work together. That's how they see the future. A world where stable coins, central bank digital currencies, and tokenized assets can all live together and be used without any problems. But there needs to be a bridge for that to happen. A layer of independent settlement that links all systems, assets, and currencies. That's where the point of XRP comes in. It has taken Ripple more than 10 years to work toward that goal. They are not trying to destroy the banking system. Instead, they are making it better. Now that the world economy is moving toward exchanging value in real time, their technology is right in the middle of everything. Let's see how this fits into the bigger story. the great rotation of liquidity. In the past, world markets have gone through cycles. For a while, money went into stocks, then bonds, then commodities, and now digital assets. When interest rates go down, money starts to flow again. When money comes back in, it looks for results. And assets that are on the cutting edge of new ideas almost always do the best. It was tech stocks in the 2000s. In the 2010s, it was all about SaaS and the cloud. In the 2020s, it's now blockchain technology. With its $1 billion move, Ripple is betting on this change to happen, which is a sign that utility-based assets are about to take over. XRP isn't a joke Bitcoin, it is a settlement layer that is made to move trillions of dollars in value with almost no disturbance. And real market revaluation starts when financial infrastructure and economic liquidity are in sync. At the same time, the public story is being carefully changed. Look at the news stories. Bitcoin spot ETFs are now legal. The use of Ethereum futures grows. Talk of a Solana ETF. These are not separate. These things are steps toward normalcy. After each acceptance, the next one can be built on. At the end of the road are utility tokens, which are assets that work in the real world and are compliant. Among those few, XRP is one that fits the bill. Now think about the time. As inflation levels off, the Federal Reserve is likely to start easing monetary policy. The cost of capital goes down, markets get more cash, and institutions look for chances that aren't available to everyone. In the past, that meant tech. Blockchain is the word this time. But not just any blockchain, the ones that are built into the banking system, the ones that banks already have faith in. Following the rules has always been Ripple's long-term goal. In order to avoid going against officials and banks, they have worked with them instead. They've built trust where other projects only built doubt. That trust is now paying off. When banks start to settle across tokenized networks, they won't risk assets that aren't controlled. They are going to use the tracks that are already supported by the government. That's the lane for Ripple. In this case, let's talk about what a buyback really means. In traditional finance, businesses buy back their own shares to improve their balance sheets, lower the supply of shares, and boost investor trust. In Ripple's case, though, the effects go even further. They are buying back the token that makes their economy work. Each and every payment corridor, liquidity pool, and institutional link falls under this. A tighter, more controlled XRP float is good for all of it. Now think about what will happen when demand starts to rise at the same time. More payments are being made around the world. Tokenization is speeding up. Adoption by institutions is growing. When you add in the fact that Ripple is cutting supply, you have one of the most explosive situations in the history of digital assets. This is the reason why institutional growth is always quiet. It's not made public. They cover it up. During bad times, they let retail panic while they quietly fill jobs. We are now in a silent build-up phase. It's clear that Ripple's buyback is just the tip of a much bigger problem. The ripple effects can already be seen all over the industry. Liquidity pools are getting smaller at major platforms. OTC desks are receiving more business from institutional clients. More custody options are coming up. Even the way people feel in stores is changing from theory to strategy. It's becoming clear that hype won't bring about the next wave of acceptance. It will have to happen. The truth is that the world financial system is out of date. Even with SWIFT, deals still take days. Settlement mistakes cost a lot of money every year. Businesses that operate across borders are slowed down by errors. All of that can be fixed by blockchain, and Ripple has spent 10 years showing that it can grow safely within regulatory systems. At the same time, tokenization is becoming the new word to talk about at the highest level. There is talk about tokenized assets, tokenized bonds, and real-time payment from BlackRock, JP Morgan, and Citi. But if you want to tokenize assets worth trillions of dollars, you need a neutral liquidity layer that can settle quickly and around the world. For that reason, XRP was made to do that. It's not a test run. It is a finished object. When the world's biggest asset managers look into tokenized treasuries, real estate, and carbon credits, you need a way to move those assets between blockchains, countries, and fiat systems. Ripple built that layer so that different types of money can work together. Let's talk about geopolitics now, since this is where everything fits together. CBDC projects are moving faster in many countries around the world. China has the yuan coin. Europe is looking into making the euro digital. And more than 130 countries are trying digital currencies in some way through their central banks. That being said, those CBDCs can't live by themselves. To talk to each other across lines, they need bridges. That's already how Ripple's CBDC platform is set up. It lets central banks create, control, and trade digital currencies on private ledgers while still linking to the XRP ledger so that digital currencies can be used across borders. That is the last piece of the puzzle in global banking, being able to settle values quickly across many systems. The outcome is certain when macro liquidity comes back, institutional usage speeds up, and governments incorporate blockchain into their money systems. The most important part of this change is a complete reassessment of assets. The buying of Ripple is what started it all, not what ended it. It tells everyone else that they're ready for the next wave and will not move. Because things will move quickly when the reset starts. People who aren't ready will be left behind because money now moves online. Also, look at how the market as a whole feels. The big players, like hedge funds, sovereign wealth funds, and corporate budgets, are focused on infrastructure, while small investors are interested in meme tokens and short-term plays. They know what will be worth it in the long run, not because of the hype, but because of the base. The same thing is being done by Ripple. They're not following trends. They are making global payments stronger at the base level, in the same way that Cisco built the backbone of the internet before anyone knew how useful it would be. And it's no longer just about sending money across borders. Going into tokenized banks, liquidity hubs, and even carbon credit markets are all things that Ripple is doing. Every new industry they go into makes XRP more useful. Every passageway they open makes it easier for transactions to happen. Every buyback makes the quantity smaller. We're seeing this plan play out in real time as it happens in stages. It's time for institutions to wake up. Governments are getting along. Corporations are joining together. Of course, blockchain is being used to build the framework for liquidity of the future. We are on the verge of a once-in-a-generation change, from analog to digital, from closed systems to open ones, and from traditional finance to programmable cash. And when you put it all together, the $1 billion buyback of Ripple, the changing political stance on crypto, the approvals of ETFs, the central bank pilots, and the trillion-dollar flow of cash, it all goes to the same clear conclusion. Right now, the new banking system's rails are being put in place. We've now reached the stage where everything speeds up. When money, media, and technology all come together in one digital system, the signs are all over the place. The $1 billion purchase by Ripple is the most obvious sign. But the quiet ones, the ones that are hidden, are even more important. The liquidity lines of banks, exchanges, and payment processors are coming together. Big names in fintech are trying tokenized money transfers. Pilot projects are being run by governments to link CBDCs to private ledgers. It is getting easier for all of the parts to work together. In that case, the asset that lies in the middle, the one that connects all the rails, is the best way to get cash. That's what XRP does. We can see a new monetary order being made right now. Bitcoin has proven itself to be the digital equal of gold, a source of value that can't be censored and is spread out. And every system needs a bridge asset, though, something that can quickly and easily move value from one place to another. The whole point of XRP is to do just that. It adds on to Bitcoin, not competes with it. This is why Ripple's move is so important. A $1 billion purchase is more than just a way to save money. It's also a statement of intent. We're ready for step 2, it says, because price isn't the goal when utility uptake and macro liquidity meet. Price is just a result. Let us now talk about what comes next. We've seen this movie before, but not this way. Investors thought it was pointless for Apple to buy back its own shares in the 2010s. Years later, those same buybacks were a big part of a value of $1 trillion. When Tesla started lowering its production costs in 2018, some people thought it was a bad idea. After 2 years, it led to one of the biggest increases in market value in history. In the same way, Ripple is slowly and strategically making a move. While the crowd still doesn't get it, they're not the only ones. The biggest banks in the world are quietly getting ready for a time when assets are tokenized. BlackRock is in charge of tokenization tests. Treasuries are being digitized by Citi and JP Morgan. The London Stock Exchange is getting ready for settlement methods that use blockchain. The IMF and BIS are working to make it easier for digital money to move between countries. Each of these events makes one result more likely. Liquidity networks based on blockchain will be the backbone of global banking. And the assets that make those systems work, the ones that handle payments and interoperability, are worth a lot more the moment they go live. This buying of Ripple is so different because of this. It's not about the big news or hype. It has to do with organization, liquidity, and balance sheets. By putting XRP back into limited circulation, Ripple is reducing the amount available while increasing demand around the world through new partnerships. It's not a pump, that's a model of manufactured scarcity. The type of money that every central bank has used to raise prices throughout history. The culture of stores also plays a role in their adoption. When creators like Mr. Beast, who has almost 500 million fans, start using crypto banking, it's a sign that more people will want to join. When blockchain tracks and social finance work together, the financial system isn't just big businesses, it's also people. Every person who watches becomes involved. Each user turns into cash. That's why this change can't be stopped. It's not just policy, it's also how people participate. Teenagers, artists, businesses, and governments are all coming together to form a single community based on blockchain technology. Ripple has been quietly getting ready for this change for more than 10 years. Now we're here. The US is switching from gold to Bitcoin, institutions are moving toward tokenized assets, crypto is becoming more popular, and Ripple is securing XRP like a central bank to get ready for a new standard. For one synchronized world reset, it's all a part of it, a change in the flow of money from the old world to the new one. And when the next part starts, when money comes back in and rules are eased, the assets that are useful in the real world will be the ones that lead. That's the lane for XRP. Not only is it a crypto project, but it's also the foundation for digital money. As time goes on, every move we make, every rate cut, every ETF approval, and every CBDC integration brings us closer to the point where XRP's true role can no longer be denied. It's known to Ripple. Banks are aware of this. The people in charge know it. Soon, everyone else will too. Small traders are responding to the noise, but experts are building positions. They are securing their positions before the real wave of cash hits. When the value of everything in the world moves online, across borders, currencies, and assets, the link between them all becomes priceless. That's what this moment stands for. Right now, technology, funding, and timing are all coming together in a way that has never happened before. You know this isn't the end of the story if you know what's going on. Everything we think we know about money will be changed by this new era of money. And I made something to help you get around that if you want to be ready for it. The XRP Millionaire Blueprint is the name of it. A full guide with a paper, an infographic, and a video walkthrough that explain how to find the types of setups that make people rich for generations. You can get it now. It's in the message that's pinned below the video.